Okay, so today we're here with Robert Miller. Robert, an entrepreneur, operator, and founder of Algo Alpha, right?
Yes, sir.
So thank you for being here today. And wanted to ask you a few questions. First, for people who may not know what algorithmic trading is, let's start there. Let's start simple. So
Yeah.
the first question I wanted to ask you is, why do you think so many successful professionals are having a hard time with trading platforms?
Yeah, that's a great question. And I mean, it's no secret that our society is becoming more and more algorithmic. I mean, first off, social media is all algorithms, right? We have every single one of the new softwares that's coming out for our businesses all has some sort of algorithm in it as well. So when you kind of take a step back and realize that your life's basically being integrated with algorithms more and more and more, it actually kind of takes that veil and that scarcity of, what is algorithms, what are machines doing in my account down, because our whole society is now running on algorithms. So that's really the first thing. And so when investors or when professionals are looking at, ways to increase their portfolio returns, they're looking for ways to have more cash flow. If you don't use some type of algorithm as it relates to trying to generate that income or as it relates to trying to get distribution, you won't be with the times. So like if you were starting your own business and you wanted to run Facebook ads, well, Facebook is an algorithm, right? Instagram is an algorithm. If you want to start creating content online, you have to do what the algorithm says, right? So specifically for financial markets, trading algorithms simply just take advantage of all the volatility that's happening in the market. So whether that's the gold market, whether that's other currency markets, and the reason why they're more and more important now is because about half of all the activity going on in markets is actually algorithms. It's not even humans anymore. So you thinking that you can compete with the institutions that are using algorithms is just outdated thinking. And so just a lot of people haven't caught up with the times there.
What's actually broken in the traditional sense of like how you're taught to look at markets and all these charts and stuff?
Yeah, absolutely. I mean, the traditional way or the modern portfolio theory was 60% of your allocation is into stocks and 40% is into bonds. Recently, JP Morgan and Morgan Stanley said, hey, you should actually do 60% bonds, 60% stocks, 20% bonds, and 20% precious metals, which is sort of a safer portfolio than 60-40, but your returns are still maybe 10, 20% a year on a good year, which is great. Don't get me wrong. It's not like algorithmic trading replaces a traditional portfolio, but you're not going to see the returns of 5%, 10%, 20. Some of our softwares have done 50% a month for quite some time. You're just not going to see that with buying and holding a stock overall. Unless you're super early on and you had some insider information, typically right, you're just not going to see that gain. And so the average investor is told, just buy the stock market every single month from every single paycheck, have a 401k, have a Roth IRA, and just stack over time. Warren Buffett says to buy the S&P. Well, it's because investing takes technicality. It takes skill. There's a reason why he was the #1 investor from a buy and hold perspective for a long time. It's because that was his craft. There's other people that have had better returns than Warren Buffett that have used algorithms to do so, but most people just don't understand that. And so that's why algorithms are the better way to approach markets than taking the old advice.
So you've worked with a lot of different business owners. What patterns do you see when they're trying to manage money themselves?
Yeah, sure thing. And I can speak even from firsthand because I've, grown my own businesses and stuff. And when you're a business owner, a lot of times all the decisions are on your plate. So you're thinking of every single financial decision. You're thinking of every single investment. And as a good CEO or as a good partner in the business, you want to try and grow that business over time. But there's something called the CAP model. And the CAP model is basically your competitive advantage period, which means that business won't be as profitable for the duration of its life if you have a lot of the attention right now. I mean, there's so many AI businesses that'll go out of business. They just have this little tiny glimpse in time that they're actually able to take advantage of. And so when you have so many decisions that you have to make, a lot of business owners just don't have the bandwidth to then switch into portfolio management, into wealth management. It's a completely different beast. And I had to learn that myself. I was scaling a company to 8 figures, and then I wanted to go deeper into investing. And the pace alone of scaling a business at that pace to then working with these older institutions, it was so slow that decisions over time for investments or decisions to get things through those processes were just so slow that it was taking time away from my business, which was the thing that was making me the money in the first place. So I see a lot of business owners, either they can't make that shift into compounding their wealth because they're not used to that tempo and it takes their focus off of what they should be doing. Or secondly, as a business owner, you feel like you're in control of every single financial decision. You've probably built systems in place. You probably want to delegate that and have that in place for your portfolio, but you just haven't found it quite yet. And that's what we're here to solve.
Is that a psychology issue, or is that like a strategy issue where the individual doesn't have a strategy to go in with, or what do you think?
I think it's both, right? Because everyone can say it's a psychology issue, but you're really just you are trained to believe certain things with the information that you have in front of you. So just because you're not exposed to something doesn't mean that A, it's not true or it's not possible. It just means you haven't seen it yet, right? So you haven't been conditioned to it. Like if you say, I want to go, buy a orange Porsche, you will probably start seeing Porsches everywhere now, even if you're not driving one, because you're attuned to it, right? And so as business owners, you're typically attuned to what's going on in your business. You can feel when certain people are off, or when revenue is going to dip, or when revenue is going to spike. You can sense it and feel it because you're focused on that. And so it's not necessarily a psychology issue, but to relinquish control is typically where there's a lot of growth involved, in allowing systems to do something or allowing and delegating to other people to do stuff. That's typically where the growth is. But strategy, I mean, a lot of people that own their own business, they don't have a wealth strategy. They don't have something that's producing more returns than their business, or else they probably would be sticking to that. And so that's why, if you invest in the stock market, you're making 20% a year, 15% a year, 10% a year, and your business is making more than that, all your attention is going to go to your business because that's what's making more. And so it's until you find something that can potentially produce more, that would capture your attention.
It's funny you talk about the emotional side of it. I'm getting started in trading myself too, and I'm trying to learn and stuff. So one of the things I will say is that what is the hidden cost of emotional trading?
I mean, you really have to be rock solid as it relates to doing manual trading. You can't let your emotions get involved. And we kind of come from the same background in that regard, just running our own businesses, starting to get in trading. I mean, I started trading about 8 or 9 years ago, but it was kind of off and on because I just couldn't keep up with the business and trading at the same time. And if the business is not going right and you try to trade, it's not going to work. Like, you have to approach your trading session the same way every single day, every single time, and let the market be the thing that's extremely volatile. So there's two things that really expose your growth. It's usually your woman or your partner. They're going to be a reflection of you, and the markets will be a reflection of you, because the market does not care how you think, how you feel. It either went up or went down, right? So that's why having some systems, automations that remove all of that emotional decision making just helps a lot of people in the first place approach markets, let alone obviously the returns that come from it too. So that's probably the biggest thing, is if you're approaching markets, you should have a strategy and some systems in place, not just go at it alone with your emotions. For sure.
Let's zoom out for a second. Okay. For someone who is unfamiliar with these terms, how would you explain it to them?
Yeah. So by and large, what an algorithm is really just simply a system or a strategy that is programmed to execute with no emotions, just following those rules. Now, with the recent enhancements in AI can obviously make those adjustments in real time, so it's not having to only be predefined. So that is continuously being a trend, is where you'll see a lot more AI data compressing and actually into these strategies being used. But by and large, let's say you thought something was going to go up in price. Instead of you looking at the chart, entering the trade, exiting the trade, every single time that little pattern emerges, you just have a software do it. So having a software do that, and obviously the ones we built are a lot more complex than that, but that is the simplest way to put it. Predefined rules, executing a specific plan by looking at the market in real time and executing against it.
So why do you think that rules-based algorithms can outperform human discretion?
Yeah, for sure. So we can only process so much information. Computers and technology, especially with AI nowadays, can compress and see so much data that we can never see. In fact, when you go to trade, there's typically only a few indicators that manual traders will use, because they can only think of 2 or 4 different pieces of information to make their decision. Whereas an algorithm or a computer software can take in 5 million pieces of information, process it, and adapt, and actually make trades according to that data. So a lot of times when manual traders get something wrong, it's because they missed a signal. They missed the data that they should have caught. And if they're not programmed, like if they haven't figured out how to program their mind to be sensitive to those data points, then that's where the emotions happen. That's where they lose a lot of trades. They get frustrated, and it can become a downward spiral because they just aren't processing data fast enough for the market they're trading.
So is that about predicting the markets or responding to them?
Yeah, so algorithms, there's 2 types. There's the real-time analysis, and it'll recalibrate to the market conditions. And then there's rules-based. Now here at Algo Alpha, we have both. Our Gold Alpha has 5 different AIs layered into it, so that one's a bit more on the cutting edge side. Our other portfolios are rules-based for larger portfolios, and they work extremely well as well. There's not necessarily one that's better than the other, they're just built different. And so rules-based takes out all the emotion. There's still rules-based built into our Gold software. It can just process data in a very different way. And so if you don't have something rules-based in your life, you typically are victim to your emotions. So if you didn't have great communication with your girlfriend, if you didn't have great communication with your spouse, your partner, your kids, whoever, if there wasn't a protocol you're following, you're typically just swaying. And you're not going to hit your goal by swaying. You have to have systems and processes in place.
Let's talk about specifically Algo Alpha. Okay. So you're not taking custody of funds. It's not a hedge fund or anything like that. So what exactly is Algo Alpha?
Yeah, great question. So Algo Alpha is a software as a service company. So essentially we have a portfolio of strategies or multiple strategies that people can choose from. You can license the technology and install it in your very own broker account. So we never take custody of your funds. It connects through a secure API. So you have custody of your funds. You can withdraw your funds at any time. You can even pause the software if you wanted to at any time. So what we do is we build and develop these technologies, these proven strategies. We first, before we even make them available to you, we actually run them internally for at least a year, because we don't want to ship out a beta product or anything like that. So we have to run them. First we strategize, we build them, then we test them, then we run them with our own capital first, make any tweaks or enhancements during that entire process. And once we have that final product, that's when we make it available. So it goes through a rigorous process before it even gets to you. But the beauty of that is that you get to just have a couple clicks, have the software run, deposit money into the brokerage account, and then that way it can run the trades for you without you having to do any manual trades yourself. So we built it in a way for investors, business owners, busy professionals, corporate professionals, anyone that's looking for better returns, to have a couple clicks with a strategy in their portfolio and let it run.
That was my next question. Who is this software actually built for? Like, what type of investor?
Yeah, for sure. So we work best with, first off, individuals that understand investing. So obviously trading in markets has risks, investing has risks, but you don't want to throw your life savings into one thing. I mean, that's just, principled investment allocation. So don't dump your whole life savings into Apple. Don't dump your whole life savings into, one trade or anything like that, right? So what we do is that we work with a lot of investors that already have a 401k, they have a Roth IRA, they have investments, they understand how ETFs work. They typically just have money sitting aside as well, along with their standard portfolio. And they want to put that money to work. So if you want to get hyper specific, we work with a lot of corporate professionals, a lot of investors, a lot of business owners that don't have the time to manage their accounts. They don't have time to get in and out of trades. They just want something that's set and forget. There's a few things that happen once you install the software. Like if you want to withdraw profits, we can't do that for you. You got to do it, of course. But really, those people that just want better returns in their portfolio, this is probably one of the best bets that we've seen, and they have loved it. That's why we have great reviews. And like I said, it's built for people that don't want to have time in the markets themselves. They can just leverage software to do so.
Okay. So then on the flip side, who is this software not for?
Good question. Yeah. So this software is for not someone who has, typically we like to say less than 50,000 in net worth, and net worth can be, cars, and can be, all your other stuff as well, because the people that we like to work with understand that portfolio needs some money to actually perform. You can't expect to work with $1 with us and expect that to be $1,000,000. Like, that's just not going to happen. We're realistic about that. So it's not for someone that's extremely skeptical of algorithms. I mean, look, if you're watching this video, an algorithm served it to you. I don't know what else to tell you,
Yeah.
So if you're skeptical of algorithms, if you're negative, if you are trying to bring a lot of ego into the whole, deal, it's just not going to be a good fit, because you're going to try and change the software from how it was built. And we've had a few people that were like that we just said, hey, you know what, man, this isn't going to be a good fit. You should probably just stop with, our program and stuff. So really, this isn't for people that, are giving us their last money. They're not super emotional about trading. They're not here to try and get rich overnight with $1 into $1,000,000. Even though we do have people that have made millions of dollars with the software, that's great. But it's just not going to happen overnight, and they have to understand risk management a bit as well. So if you're not in this place to invest into yourself or into your portfolio, it's just not going to be a good fit.
So how's your vetting process? So like when you say it's not a good fit, you typically get on a call with somebody and run, ask questions, like you vet them first, right?
Yeah, so we have a pre-screening process with a lot of our marketing and our applications and stuff. But if someone gets to the phone call with one of our team members, we basically ask them a series of questions saying like, hey, is this actually a good fit for you? Because even if you had all the money in the world and you just had a bad, attitude, we don't want to work with you in that regard. Like, it's very exciting to start making more money with technology and with softwares, but we really care about our reputation. And so if you're already showing us signs that you're a tire kicker, you're already just showing us signs that this isn't going to be a good fit because, you might be just angry, I don't know, for whatever reason, but you just don't have a good attitude coming into this, it's not going to be a good experience long term for us. Even though you're going to get the returns, we just don't want that energy overall. And so we really require a level of professionalism. We require them to actually understand what it is that we're doing. They don't need to get all technical, but understand how this works, how they participate, because at the end of the day, they get to withdraw their money whenever they want from the profits. And that's why we built this process the way it is. We're not a hedge fund, so we can't help you in regards to custodying your funds. We can't, send out disbursements or anything like that. We're not a hedge fund. We're a software provider, and you're being empowered for your own portfolio. So you need to understand how that works. And if there's too much friction in that process, typically just on a personal basis, it's just not worth the headache. Now, we do provide a lot of education, resources, support. So if you don't know this stuff, that's totally fine. Just have a great attitude about it, and we're more than happy to help you.
Let's talk about transparency. I'm a very transparent person. If I know I can't do something, I'll let you know, hey, I can't do this.
Yeah.
But let's talk about the elephant in the room. Trading takes risk. So how do you communicate that responsibly to the user?
Yeah, of course. So first off, there's always disclaimers on everything that we have. And so we never make a performance promise of what it will do in the future. We always show historical data, and we say, hey, this is what has been real, live, running in our own accounts and our clients' accounts. So you can see what has happened. You can make the decision for yourself. We're not here to pressure you into getting started on something that you don't understand. But fundamentally, transparency for us, we put all of our softwares on a third-party website called MyFXBook. So you're able to see the performance for yourself from a third party without any manipulation of the data. The second thing that we've done to further our transparency is we've gotten a CPA to sign off on the performance, which means that they reviewed the accounts, they reviewed what IFXBook said, they reviewed what the algorithms did, and they reviewed the brokerage account, and they're saying, okay, yes, sign off on that. What they are claiming is what has happened as a CPA. And there are CPAs specifically for algorithmic trading. So this isn't like a CPA in your local, community or anything. These are hedge fund grade, institutional grade CPAs that know how to review algorithms. And so that's another side of transparency that we have. So this isn't like a mom and pop or any kind of CPA like that. This is, institutional grade type of CPAs that know and understand how to review algorithms and their performances. Now, the third part of transparency, when clients get started with us, they have their own dashboards, they have their own database that they're able to see all of their trade logs, their performance, their returns. And obviously they can see that within their brokerage account or within their trading account. but we provide that additional layer of transparency when they're already on board. On a monthly basis, we send them performance reports, and we send them something called our alpha report is what that encompasses. And we just tell them, hey, this is how our systems are doing. This is how systems are adapting to the market right now. Here's what the performance has been. Here's our outlook with things. So we try and be as transparent as possible. We understand what the softwares do. We're more than happy to answer questions for people that have questions on them. So we're as transparent as we can make it overall as it relates to the performance, what has happened, CPA sign-offs, and then what they actually get when they get started with us.
What I found, even as being as transparent as you can be, there's always going to be that one person that's just super skeptical, just not, I don't know if this works.
Yeah.
What do you say to that person?
If he or she doesn't want to get started with us, that's totally fine. Like, we don't need people that are extremely skeptical. Obviously, you should be skeptical when you're looking at something new, right? You want to test the waters first. That's totally fine. People get started with our software and then they deposit like the minimum requirement for the software. They're not depositing, $100,000 or 200 or even $1 million right away. They may start smaller with $5,000, $10,000, $15,000, depending on the strategy that you choose, if you wanted to test it out, and then add to it later, right? So if someone that is skeptical but really wants to do what it is that we have, then they can start with the minimum balances for the strategy, see how that works for the first 30 days or so, and then obviously they can add or remove money as they deem and so fit.
Let's talk about the markets, because gold has been in the headlines lately. Okay,
Yeah.
So one of the things I do want to ask is, in your experience, and in your, you're the master of this, I would say, why has gold been such the focus recently?
Yeah, so there's a lot of things going on with gold, and I'll first say like a quick backdrop that one of my mentors, who happens to be a billionaire, told me. He's like, your day trading activity should never be the way that you focus on creating wealth from a market. It's the way that you should be cash flowing from a market. And I'll never forget when he told me that, because when then I looked at different markets to approach, I was like, okay, what things can create wealth and what volatility or what price action will allow me to cash flow it from it as well. So gold is one, Bitcoin is another. Everyone typically knows about Bitcoin, but let's focus on gold for a bit. So about, what is it now, 6 years ago? It's crazy to say that that major event happened 6 years ago now. But when it hit, the US government printed 40% of all US dollars within about 18 months. So out of all the money ever printed before, 40% was printed in about a year and a half.
Wow.
So what that caused is inflation. Inflation is the chasing of goods that are scarce with more money.
Yeah.
Hey, if you have a water bottle that I want that's $1, there's only a finite number of water bottles, I'll give you $2 for it to just give it to me. That's what creates the inflation that we all experienced, and everyone has felt it, from consumer prices to haircuts going up, services going up, because everything is just costing more. So when that dynamic happens, two things happen as a result of it. One, all of the businesses that are a beneficiary of inflation and consumer demand, their sales go up. So like Walmart's and Amazon's and that kind of stuff, their prices go up because they have the goods that everyone wants. But on a currency basis, anything that is scarce will inflate. So gold is a scarce asset and has continued to inflate over time. Bitcoin, scarce asset, inflates over time. Housing, scarce-ish asset, but waterfront housing, very scarce, inflates over time. So anything that has value will always continue to go up in value against the dollar because they continue to print it over and over. Now, for our generation, we are in the middle of a big financial world order change right now. And that is that the US dollar is not holding as much value as it used to, because we continue to print. We continue to use our US military to invade countries and start more conflicts, and then more dollars get printed, and it's a cycle. So all of the central banks around the world, the Federal Reserve is not the only central bank, by the way, there are plenty of central banks, they look at their balance sheet and they say, okay, if the United States is going to continue to print the money every single year by at least 7%, that means that if we hold 100 million US dollars, the value of that's going to go down by 7% every year guaranteed.
Mm.
They're buying gold now because gold is going up against the US dollar.
Mm.
And so that's why gold has gone from about $2,100 about 3 years ago. It's now $5,300.
Yeah.
And it's going to continue to go up because more and more people are getting rid of their dollars, their currencies, their fiat, their yens, all that stuff. And they're buying gold as a hedge against all of the printing that's going on.
Yeah. So why do you think volatility creates opportunity?
Well, volatility and opportunity should basically be the same word. Wherever there is volatility, there's disruption. And that disruption is to either a prior company or to a world order or to some sort of macro system that was built. So gold prices rallying super high, that's because people aren't trusting the US dollar or other fiat currencies anymore. People buying AI stocks and AI companies rather than investing in the Salesforce and the legacy software companies, those stocks are dropping 15, 20, 30% right now, and AI companies are coming up. That volatility means disruption is occurring.
Mm.
So you can't have a market without disruption. They are the same ecosystem, if you will. And so the more that we see volatility occur in each market, know that something is going on that's fundamentally unraveling the prior way that people looked at that asset or that company or that market.
Mm. So what was the thinking behind Gold Alpha?
Yeah, so the Gold Alpha strategy is specifically designed to take advantage and capture the profits from all the volatility happening in gold. Mm. So when you have a market that is continuously pushing forward or is declining, you essentially have to look at, in my opinion, you have to look at the ways that that opportunity or that, let's restart that. Can you ask the question again?
Yeah. So let's go back to Algo Alpha, or I'm sorry, Gold Alpha, sorry. So what was the thinking behind Gold Alpha?
Yeah, so Gold Alpha specifically is focused on the gold market, doesn't trade any other softwares or any other markets rather, and it's layered in with 5 different AIs. The reason we did that was because it watches the overnight session in Asia, it detects what volatility and what liquidity is actually doing, and then we enter certain trades. So because we watch things overnight, we check the Asian session, we see what the setup looks like for the day. And because gold continuously moves day in and day out, we can take long positions or we can take short positions. But our 5 AIs will basically calibrate and tell us what the day will actually look like. So at least in recent times, a lot of our trades have been longs, and they have been, doubling down on certain trades, or they've been hedging for certain types of trades. But that's mostly been because gold has continued to rally. Now, gold sold off a few weeks ago. In the later weeks of January, we took shorts on that. And the reason why that these 5 AIs that are layered into it are so important is because gold's going to continue to do this. It'll trend up into the right over the next couple decades, I'm sure. But you need to have that real-time feedback. So our thinking behind the Gold Alpha was, let's create a system that harnesses the AIs that are being built and that are available now today. Let's go ahead and take advantage of all the volatility going on in gold by extracting profits from this market. And we do know that gold is going to continue to go up. So let's build a system that can continue to monitor it, because if gold is going to continue to go up, that means it's going to do this for quite some time. So that's why we built it.
That sounds to me like you have a specific strategy in place for gold. So why do you think that gold requires a strategy versus just holding it?
Great question. So I bought gold and I bought Bitcoin at the same time in 2020 when everything hit. Gold did nothing for 2 to 3 years. All right. So you can be right on something and still buy something at the wrong time. It's not necessarily that you were wrong, it's that your strategy was incorrect at the time that you bought gold, because it was flatlined for like 2 or 3 years. So I sold it and I bought more Bitcoin.
Yeah.
So by having a system that sole strategy is to monitor a market and extract profits from it, that takes that pressure off of you having to come up with strategies. Should I buy? Should I sell? Should I do it right now? Just let it watch the market and pull, the profits from the opportunities that are available, instead of you thinking that you can time the market. A lot of people get that wrong, where they think that they can rush the market or make a certain amount of money from the market because they need that money or they want that return. The market does not care. The market's going to do what the market does. So if you don't have systems that can help you actually execute on the profitability strategy for a market, then you're relying on yourself understanding that market. And if you're just too greedy, it's just not going to work. So that's why we built a strategy on gold. I love gold. I think it's going to continue to go up and to the right. So we wanted to build systems that essentially can help us cash flow throughout that process.
Cool. So one of the questions that I was thinking right now too is, someone's lifestyle, someone who's like very busy and stuff, right? So how much time does someone actually need to commit?
Yeah, so for our strategies and for our softwares, once you plug it in, you're really just monitoring it to withdraw profits. So yes, you want to check on it just like any other financial account, but you don't have to enter any trades. You don't have to enter any exits or anything like that. It'll do it all for you. In fact, we had a business owner that got started last month on the 3rd of February. He put in 70 grand into his account. And because February did extremely well, we closed the month off at 56% in profit. He made $34,000, withdrew that money, and he's going into March now to do the same, or we'll see if it does more or less of that return. But all he had to do was deposit money, watch it, withdraw money when he saw fit, and he made 56% in a single month, so 34 grand. So that's the type of power of the strategy that we have, number one. But two, the user, you don't have to wait for us to give you your money or anything like that. You are in complete control, so you can withdraw at any time that you want, and you get to determine when you want that cash or not.
That's great. That's exciting.
Yeah, right.
So what does the onboarding process look like?
Yeah, so like if you got started right now, you can be live probably within an hour to 2 hours. The onboarding we walk you through. We have full dedicated videos on how it all works, whether you're a brand new person to markets and you never traded before, or whether you already have accounts set up in the market that we trade in, you can be live really quickly. So there's about 6 main steps: setting up your broker account, signing up for our portal, funding your account, and then we will actually activate it on your behalf. So there's a form that you fill out. Once that's done, then it's in your control and you can withdraw at any time in your account, pause the software, and you can basically let it run live. So it doesn't take that long. It's very simple. We recommend people doing it from their desktop or their computer, but you don't have to download any softwares. You don't have to, buy any virtual private servers or VPNs or anything. They just log into our portal, connect their accounts, and we do that for them, but connect the accounts and watch the strategies run.
Do you have any older clients or like 60-year-olds that can do this?
Yeah, absolutely. So actually a lot of our initial reviews were of our older clients because we helped them through that onboarding process pretty substantially, and that gave us a lot of good feedback. But I can call any one of them up right now and they've loved like the software, the performance, how easy it is to manage. But sometimes it's a little bit new for them, right? Yeah. So they sometimes forget how to open up an email. And as standard as that sounds, like that's what's required to basically get this stuff set up. And so we've gotten them set up. They get live. They understand how to withdraw their money. And once they understand it, they love it. So there's not really a technical need overall to use the softwares. If you can log in to your email and you can log into a portal, the product is for you.
I keep hearing hands-free from you. So, but I hear you're in control. So what does hands-free but in control really mean?
Great question. So when I say hands-free, the trading is hands-free because the software is conducting the trades.
Yeah.
So once you get through our onboarding and you have everything in your portal, you don't have to do any single trade yourself. That's the part that's hands-free.
Okay.
So just like you log into your email, you check on some things and then you close it out, same type of activity and behavior for you for being in control. In control for your portfolio means you can access your funds at any time. You're not reliant on us to withdraw money or deposit money. We're solely the software provider. So once we help you with your account setups and you have your accounts basically created and your logins, the software connects, the software conducts all the trades, but you can withdraw your money at any time. You can deposit more money. You can do whatever it is that you want with your funds. And that's the biggest thing. People want to know, hey, where's my money? How can I get my money? And that's not even something that we control. Like we don't even have access to be able to touch your money. It's all done through a secure API through our software for the trading, but we can never deposit or withdraw from your account. So the in control portion is really of your capital.
Yeah.
We're solely the software provider that'll have the trades run for you in your account.
Could I still trade myself? Like if I wanted to go, I'm just want to go ahead and make a trade myself. Would that disrupt the software itself, or does Algo Alpha always have to be running?
Good question. So we show you how to set up different accounts.
Okay.
So the algorithm will run in its own specific account.
Okay.
In the broker account. You can still conduct trades with that broker in a separate account. We typically recommend, just because, two reasons. If our software does extremely well for that month, but you were a terrible trader, your results aren't going to look that good. And it's like, hey man, like we did well, you didn't, number one. But number two, the software will automatically calibrate to the balance that you put in to that account. So like, let's say you got started with $100,000 and I put $1 million into the account. Same software, it'll automatically adjust the size of the trade based off the balance. So if you're trying to enter trades and there may not be as much capital available into that account, well then that's also going to throttle your performance. So we always just say, let the software be in one account. You can conduct your trades in a completely different account. That way you're just not having any impacts to the trades overall.
To that example you gave. So does that mean Algo Alpha decides the maximum return based like $100,000 to $1 million? What kind of return are we seeing? Is it still percentage wise, or is still the maximum return?
Great question. So when someone gets started, we ship the software to them and connect their accounts with the standard settings.
Okay.
So that's number one risk level. We call it a risk multiplier. You're on one risk multiplier. That means that based on the software and based on your balance, it'll adjust based off of what the trade should do and ping it to your account. So if you have 100 grand and I have $1 million, my trade is trying to enter a $10,000 position, it'll chunk it down and you'll enter a $1,000 position, basically. So as that essentially scales out, if you're on the same risk setting as I am, we'll have the same return because it's the same trade proportionally to your account.
Yeah.
Now, there are settings for our more advanced users, and we make them go through an entire training on this. You can throttle up or down the risk. So if you went up to 1.5 or you went down to 0.75, you're essentially, it's a ratio of how much more risk you're willing to take and how much less risk you're willing to take. So that's more of an advanced training that we have internally for our more advanced users that are really wanting to play with the software. But most people are just going to be at that same one level that everyone else is at. That way that they can mirror as best as possible our trading account.
So that's funny. I like to, I'm a risk taker. So I'm probably going to say like max risk, like going all in and everything. But with that, it comes frustration, right? For somebody frustrated with traditional trading, what are the questions someone should be asking themselves about the software?
Yeah, so you said two things there. One, if you're a risk taker, you're already letting technology do the trading for you, which some can consider that that's risky, right? Don't get too greedy. So that's like the flip side. If you're taking on risk and you like the strategies that we have, then it's all about checking your greed and your ego at the end of the day.
Yeah.
So like our software in February did 56% in a single month. The month before it did 57%. Month before it did 35%. Those are really damn good returns, right? Now, for someone that wants more risk than that, again, they have to go through our training because we're not, responsible for making those tweaks. We give it to you at one risk. If you want to adjust, that's completely on you. We want to educate you and train you on that. Now, as it relates to, what questions should someone be asking themselves? One, are you happy with the performance in your portfolio? If the answer is no, then you should consider alternatives. Alternative investments have been on the rise for the past 5 years because the traditional stocks and bonds have been breaking for quite some time and everyone knows it. So then the third thing is okay, if I am going to do alternative investments, what matters to me? Well, if you're considering us, you keep your liquidity at all times. We have proven track records and you can deposit and withdraw your money at all times. In other alternative investments, you may have to fork up a lot of money for, physical products or like physical things that take time to sell. So if you want your liquidity at all times, that may not be the best route. Like if you're buying a car wash business or you're buying something that, is a bit safe and has a lot of overhead, understand that you can't get in and out of some of those older school businesses as easily. You have to ride it out and see that cash flow cycle over a couple of years before you can exit again. So the reason why people look to us is because they keep their liquidity. Like I said, they can turn it on, turn it off, and they can just use the software even as an interim way to park money until they do invest into a real estate project or whatever. But time and time again, I just see people not understand that opportunity cost is such a big, real thing. If you're trying to save up for a real estate property and you are on a track right now of saving, let's say, $3 or $4 a month, it's going to take you 10 months, 20 months, 30 months to have excess cash to even consider something, right? Or if you're waiting for a bigger deal, you have to have the time to either save or let time work on your side and have things compound, so that way you can make XYZ investment for whatever it is. And so the decisions that you make with your investments and the decisions that you make in your life are going to show up 3 months from now, 6 months from now, 9 months, 12 months, and really over the next 5 years and decade, the decisions you make today will show up. So what decisions are you willing to make? And if you're not happy, or if you're just even curious with how you can do things differently and how you can do things better, then you should evaluate what that decision will end up for you in the next 3 months, 6 months, year, and beyond. So all comes down to your decisions and what you truly believe.
Segueing off of that note, the risks, right? What is the risk of doing nothing right now?
Yeah, if you do nothing, you're guaranteed to lose money by holding money in the bank. 2 reasons. US dollar has gone down in value by 10% for the past 2 years, back-to-back years. It's publicly reported. 10% a year has been the depreciation of the US dollar. So if you held 100 grand 2 years ago in your account, it'd be worth about 80 grand. Even though it says 100 grand, 80 grand worth of purchasing power from 2 years ago. Mm. So you're guaranteed to lose money if you do nothing. Mm. I mean, if you want to lose money, then cool, do that. I'm not saying cash on the sideline is bad. It's just saying, like, if you hold it for a longer period of time, the dollars are going to continue to depreciate. Second thing is if you do nothing, will the things that you want to do in your life actually be possible? Because you're dealing with everything costing more, the US dollar going down in value, cost of living driving through the roof, being more expensive. So even on your current path, is that going to keep up with the lifestyle you have or that you want? Or are you going to dwindle away and be kind of, sidelined down? Those are all questions that people have to ask themselves. It's like everything has risks. Holding money in the bank account isn't as safe as it used to be. That all changed 6 years ago. Mm-hmm. So time and time again, people are having to wake up to what's happened in the markets, what's happened with their money, what's happening right now. It's accelerating faster than we've ever seen before, partly due to technology, partly due to AI. Things are just being processed a lot faster. So if you are operating off of old information, you will be left behind. That's how you get left behind. So you got to update your mindset. You got to update the actions that you take and the beliefs that you have. And then that typically will result in investing into new things, investing into yourself, investing into things that are helping you achieve the goals that you actually wanted. People typically don't care about what the business is or what the mechanism is that gets them to their ideal life or their ideal return or whatever the case is. They just want to get there. So you just have to have the appropriate mindset to try something that can help you get there.
What would make this, what amount of money would make this worthwhile?
Good question. I mean, it really comes down to how much they're trying to make on a monthly basis. There's 3 types of investors. We have cash flow investors that take withdrawals every month. We have diversifiers, so they have 10 different things in their portfolio now, and they want to add an 11th stream. And then there's alpha investors, which are the riskier individuals, like you were saying earlier, right? So if you're a cash flow investor, if your goal is to make 3 grand, 5 grand, 20 grand, 100 grand a month, you just got to pencil out the math with whatever our softwares are producing and see how you can actually hit that. So if our software produces, for example, 10% in a month, and and you want to make $100,000 a month, well, then you need to have $1 million in that software, in that strategy.
Yeah.
Some of our softwares do way more. Like I said, we have softwares that have done 33 all the way up to about 57% in a month. Then we have smaller strategies that are doing anywhere between 4% all the way up to about 20% per month. So we have a bit of a risk curve, like the higher risk, higher reward, and obviously lower risk, lower reward spectrum with all of our software. So it really comes down to what's your goal. Is it a cash flow goal? Is it a portfolio growth goal? Obviously, everyone wants to make more money, but what does it actually tactically look like, and how does it actually materialize to your life? That's a question for each person to answer themselves.
So if someone's on the fence about Algo Alpha, what would you tell them?
Well, what are you on the fence about, number one, right? So is it the technology and the portfolios? Well, we have third-party CPAs, third-party MyFX book links that we can share with you. And we have hundreds of clients on our platform that are all producing great returns, great results, and we have great 5-star reviews as a result. So if you're curious about our softwares and our strategies, if they work, that's one box. The second thing that if you're skeptical is, are algorithms real? Well, we covered that earlier. Algorithms are extremely real. It's whether you are being used by them or if you are using them. So if you want to flip that script, then you need to find algorithms that work for you and help you hit your goals. And the third thing is just really, who are you working with? And if you don't trust the people that you're working with, you don't like how they operate, you don't like how they're not being transparent on certain things, or they're not providing educational material, they're not committed to their clients, well, then that's a good reason to be skeptical. Whether you're seeing it on an ad, whether you're seeing it on us online on like YouTube or something, you want to be with people that are doing it, been there, done that, because your network is your net worth. And so there's a lot of things online nowadays, especially with AI. There's AI content creators now that it's becoming harder to trust media formats, which is why I'm glad we sat down to kind of go over things so that people can understand this a bit more. But yeah, it really just comes down, man, like I said, to really understanding the thoroughness that we've put together with the strategies, the CPA sign-offs, third parties, all the things there. Our culture, why we're empowering investors, what our mission really is to make this thing simple for people, because it's happening whether they like it or not. Algorithms will take over markets and will continue to take over markets. So we want to help investors tap into that and not get left behind. And then thirdly, we have great reviews and people love our onboarding processes and results. So it comes down to, you have to get involved in order to actually to see it for yourself, or you're going to sit on the sidelines and just hate because you didn't. So come on board. That's all I got to say.
Where can someone learn more about this without feeling pressured to just take action now?
Yeah, absolutely. So we have educational resources online on my YouTube channel, on Algo Alpha's YouTube channel. They can go ahead and watch some of our other marketing material if they go to algoalpha.co. We actually have an investor guide on what they should look at as it relates to algorithmic trading that we wrote and that we've published for investors to be able to actually read. And then obviously booking a call with our team. And so through any one of those channels, I'm sure there'll be a link where you can book a call visiting algoalpha.co to be able to apply, see if there's a good time for you overall. And our team is not a high pressure sales team. Like, we speak to a lot of investors. We do private consultations. So there's no obligation when someone gets onto the call. It's to really educate them, but also to review the collateral material that we've presented, so that way that they can make a decision whether it's a good fit for them or not. And again, we work with clients here in the United States. We work with clients overseas, internationally, so we can really serve anyone and everyone, again, whether it's domestic here in the States or whether it's internationally. So we have solutions for everyone, so long that they have the capital requirements, that we think that they're going to be a good fit, and that this will actually help them, then the product and services can be for them.
Awesome. Robert, I want to thank you for your time today. Thank you so much for coming by.